Hey everyone, and welcome back to the Financial Flux. Today we're talking about multifamily real estate investing, specifically the different strategies you can use to make money. We'll break down the big four: ground up development, core, core plus, and value add. And by the end of this video, you'll understand why we focus so heavily on that last one. First up, ground up development. This is exactly what it sounds like: buying a vacant piece of land and building a brand new apartment building. This is the riskiest strategy because you're dealing with a lot of moving parts: zoning, permits, construction delays, and unexpected costs. The payoff, however, can be huge if you do it right. You're creating a brand new asset from the ground up, but it's not for the faint of heart. Next, let's look at core and core plus. Think of these as the buy and hold strategies. A core property is a stable, fully leased building in a prime location. It's the equivalent of a blue chip stock. You're not expecting massive growth, but you get a reliable, consistent income stream. It's a low risk, low volatility strategy. Core plus is similar, but with a slight twist. These are also stable properties, but they might need a few minor tweaks to optimize performance, like improving management or adding a small amenity. The goal is to slightly increase the returns while maintaining a relatively low risk profile. And that brings us to our favorite strategy: value add. When most people hear value add, they think of renovating kitchens and bathrooms to raise the rent. That's what everyone learns on day 2 of multifamily investing, right after learning the word multifamily itself. But true value add is simply about raising revenue, period. While interior renovations and amenity upgrades are the most common path, the smartest operators know there are dozens of ways to add value without touching a hammer. Sometimes the best value add is operational efficiency, streamlining processes to reduce costs and improve the bottom line. It could be as simple as renegotiating a bulk utility contract or finding a more efficient way to manage maintenance requests. Other times, it's about better marketing, reaching a different demographic, or simply improving the curb appeal to attract higher-paying tenants. This is why we say value add isn't just about putting lipstick on a pig. You're not just making a bad property look pretty. You're strategically identifying and executing opportunities to increase the property's overall value, whether that's through new revenue streams, expense reduction, or a combination of both. So, why do we focus on this strategy? Because it offers the best of both worlds. It has a higher potential for returns than core or core plus, but it's significantly less risky than a ground-up development. By acquiring a property that is already generating income, we can create a plan to systematically increase that income, creating substantial value for our investors. Thanks for watching. If you want to dive deeper into any of these strategies, let us know in the comments below. And don't forget to like and subscribe for more content like this.